Hello, everyone. Welcome to our Forex Trading for Beginner Live session again. My name is Leo, and I remain your guide. So today, before we go into our main business for today, I want to introduce you guys to our BTC Dana Premium Signal channel. So on this channel, we are going to be dropping premium signals and analysis. Okay. So we are going to be dropping Okay. Sorry about this short break, guys. We were having a little bit of a glitch. Okay. So like I was saying, uh, I want to introduce you guys to our BTC Dana Premium channel. So on the channel, we are going to be dropping premium signals and analysis. Okay. Because on this platform, we don't just want you to learn how to trade. So we want you to also learn. We want you to also earn while we are trading how to, while we are training you on how to trade the forex market yourself. Okay. But before I can get you into the Telegram channel that I'm talking about, you have to deposit. And as you can see on this screen right now, so the minimum deposit is $15. Okay. So you deposit $15 into your BTC Dana account, then you get into the premium group, then you have access to premium signals and market reports. Okay. Then if you deposit up to $200, I'll get you into the group, access to premium signals, market report, and many more. Then you can get a private session with me, a one-on-one private session with me on Zoom. Okay. So those are the benefits of you depositing. I'm not asking you to make payment to anybody. You deposit into your BTC Dana app, okay, your trading app. Deposit into it, and I'll get you into the premium channel. Okay. So with that said, let's go into. So yesterday we actually did an introduction to forex trading, but since because this is some of us are still new to the platform, so I'm very sure that some of us were busy yesterday, so we don't have the time to come online. So that is why I want to make a recap of everything we did yesterday. Okay. So if this is fine by us, let's get into business. So this is what we are going to be looking at. This is an introduction to forex trading. We talked about it. I thought, if you have the chance to come online yesterday, I actually taught the people that have the chance yesterday. But if you weren't chance yesterday, I'm guessing you have the chance today. So please pay attention, get your pen. If not popcorn you get, if you like popcorn, if you just get popcorn. Okay. Okay, so this is me teaching you how to make money from Forex. So this is just a basic introduction to what we are going to be doing, how the Forex market works, what currencies are, how to trade the Forex market, what a pip is, spread, leverage, margin, your stop loss, profit, your stop out, lot, and then how to deposit on the BtcDana app. Okay, so without further ado, let's get into the business. So Forex, I'm sure a lot of us have heard about Forex. Okay, so we hear Forex, FX, we don't understand what it is. So Forex stands for foreign exchange. Okay, so, and it is the place where currencies are traded. Okay, so let me make, in case you are still new to this, let me make a brief illustration, a layman explanation for you to understand. Let's assume you want to leave Nigeria right now. You want to travel out. Say maybe you want to travel to Canada. Like the normal Nigerian slang, we want to jackpot to Canada. Okay. So you want to move from Nigeria to Canada. You go to the airport, you pack, you have all your luggages and everything. You go to the airport, then you can't use Nigerian currency, which is your local currency. There's no way you will be able to spend your local currency in Canada. It is not possible. We all know this. Okay. So now you have to exchange your local currency to the country currency you are visiting. Okay, you are visiting Canada. You have to exchange your Nigerian naira to the Canadian dollars. Now, there's a department in airports that you can make an exchange of your local currency to the currency of the country you are visiting. And we call this department Bureau de Change. Okay, so when you get to that Bureau de Change, you give them your naira, and in return, they give you an equivalent of that naira, which is the amount you are giving them in naira. They give you an equivalent of that amount in dollars, in Canadian dollars. That process is what we call foreign exchange. Okay, so that is just the layman explanation of what Forex is. And in this Forex, how do we make money from Forex? It is very simple. Okay, Forex no be bet Naija. It's not a prediction website. Okay, here you make analysis, and how we make money from the Forex market is we speculate on one currency pair compared to another. Okay, you are speculating. After your analysis, that's what we call analysis. We will get into this in our further sessions. Okay, but for now, you make analysis, then you speculate on the price. If the price is going up, which we call bullish in the Forex market, you want to buy. If the market is coming down, which we call bearish in the Forex market, you want to sell. It's just as simple as that. Okay, and you can deposit, like I said, for you to start trading with us at BtcDana, you have to deposit at least $15 so that I can add you into the premium group. I hope you understand. So let's move on. Then we have in the Forex market, we have what we call currencies. Okay, just like the illustration I made earlier, there's no way you want to trade without currencies. We trade currencies in Forex. So, and they are traded in pairs. So what I mean by this is you are buying one currency against another, or you are selling one currency against another. Okay, so like the example I made earlier, I said we have naira, we have Canadian dollar. You are in Nigeria, you want to visit Canada, so that means we have naira, and then we have Canadian dollars. Those are pairs. They are currency pairs because they have become two. Anything that is two is called what is called a pair. I hope you guys understand now. So now, those currencies, you are selling one and you are buying another one. Like the example I made, you are giving them your naira. In return, they are giving you Canadian dollar. That means you are selling them your Nigerian naira, and you are buying their Canadian dollar. It's just as simple as that. Okay. So now, under these currencies, we have what we call major currencies in the forex market. Now, those major currencies, they are the currency of the, let me say, a more standard economy. Okay, like the Nigerian naira that I've made mention before. You know, our country now, our country is not that strong in terms of economical, you know. So I hope you understand what I'm saying. So, but countries like the US, like Japan, Canada, New Zealand, Europe, Australia, you know, those are very strong countries. They are strong countries with good economy. Okay, so that is, sorry. Sorry about that. Okay, so moving on. Those are countries of good economy. Okay, so we have under the major currencies, we have the USD, which is the United States dollar. We have the euro, which is the European currency. Then we have the GBP, which is the Great British Pounds. We have the JPY, Japanese yen. We have the CAD, Canadian dollar. We have the NZD, which is the New Zealand dollar. CHF, which is the Swiss currency. Then we have AUD, which is the Australian currency. Okay, so just take note. Okay, sorry about that, guys. Sorry, I'm very sorry about that. Okay, like I was saying, like I was saying, these are the major currencies. They are the currencies of the good economy. Okay, so now under the major currencies, under still currency pairs, we have the major pairs. Okay, and this is in forex. We have what we call the major pair. This is aside the current major currencies. Okay, so the one I just did was just an introduction to major currencies. Then we have what we call major pairs. Okay, so we have the major pair, we have the minor pair, and then we have the exotic pair. Now, these major pairs, just as we have the major currencies, these major pairs, they are widely traded currency pairs. In fact, they are the most liquid currency pair in the world because they are most heavily traded. Now, I want you to take a look at something. Sorry about that, guys. I don't know why this keep happening. Okay, I'm really sorry. So we're talking about major pairs, okay? So those are the widely traded currency pair. In fact, they are the most liquid currency pair in the world because they are most heavily traded. Okay, now, if you look at this example I've set here, you see under this major currency, those are our major pairs. Okay, now under this major pair, we have the Euro USD, we have the USD JPY, we have the GBP USD, Okay, guys, I think we're back online again. Sorry. So, like I was saying, looking at these examples under the major pairs here, you see, I want you to take note of something. We have the Euro USD, we have the USD JPY, GBP USD, USD CHF, USD CAD, AUD USD. Now, what I want you to take note is, if you look at it closely, the major pairs, which is the major currencies here, are the ones that are linked together to make major pairs. You see, we have the Euro USD, okay? They are paired against each other. We have the USD JPY, USD JPY, and they are always associated, which is the major currencies associated. Okay, so the major currencies associated with USD, okay, all the whole major currencies associated with USD. We have the USD here, okay? So any of these major currency that is associated, which is paired with this USD, is called the major pair, okay? And then we have the minor pair. Now, this minor pair, they are currency pair that are not associated with the USD. The pairs have slightly wider spread and are not as liquid as the major currencies. Okay, so now look at this example here. We have the minor pair. We have the example of the minor pair here. We have the Euro GBP. We have the Euro AUD, GBP JPY, CHF JPY, NZD JPY, GBP CAD. Okay, so those are the minor pairs. Now, they are minor pair because they are not as liquid as the major pair. Liquid in a way that it's not as if you can't make money from them, actually. You can make money from them, but the opportunities are limited, okay? Unlike the major pair where you have unlimited opportunities, okay? So those are just the difference. And they have a little wider spread. You might not know what a spread means right now, but I'm going to try and make a brief explanation on it during this course. So then moving on, we have the exotic currency pairs. Now, those exotic currency pairs are pairs of an emerging economy. Okay. So if you remember the example I made when we just started about you jackparing from Nigeria to Canada, you know, I paired Nigeria So sorry, guys. I really don't know why this keep happening. Okay. Sorry. Okay. So exotic pairs, those are pairs of emerging economy. So they are not liquid at all. Okay. So like the example I made when we were just starting, I said I linked the Nigerian naira to the Canadian dollar. Okay. Now, Canadian dollar, Nigerian naira. Um, the exotic pair, those are pair of emerging economy. Okay, just know that they are pairs of economies that are still underdeveloped. Okay, so those are upcoming economies that are still underdeveloped, like in Nigeria. Okay, so I have the examples here. We have the GBP NGN, which is Great British Pounds, compared to the Nigerian currency, which is the Nigerian naira. Okay, so Nigerian naira falls under exotic pair because Nigeria is under developed country. Then we have the USD and Hong Kong dollar. Okay, Hong Kong is also under the emerging economy. Then we have the euro and Turkish lira. We have the NZD, SGD. We have the GBP and the rand, which is the South African currency. Then we have the AUD and Mexican currency. So all those currencies you hear, sorry guys. So like I was saying, all this second currency, that is paired with the major pairs, all these currency that are paired with the major pairs are of underdeveloped countries. Okay. So that is what exotic currency pairs are. Okay, I hope we understand. And then the pairs, okay, so the currencies, I told you they are always traded in pairs. Okay, in forex trading, there's always two currencies involved. Okay, so we have the first currency and we have the second currency. With the example I made earlier, I said we have the Nigerian naira and the Canadian dollar. If you want to jackpot from Nigeria to Canada, Abi, now the naira, okay, sorry, the Canadian dollar comes first, and then the naira came second, just as we have it here in our. Okay, so just as the example I made earlier, I said we have the GPP NGN. Okay, so now this first pair is called the base pair. Okay, and the second pair is called the quote pair. Okay. So everything you see here, you see they are in two. Yeah, they are paired together. We have the Euro USD, we have the USD JPY. This euro here is the base currency, while the USD is the quote currency. Here, this USD is the base. Just know that any of the currency that comes first is the base currency. Then the one that comes second is the quote currency. Okay, so that is all what base and quote currency is all about. Okay, the base and quote currency is either the base currency is the currency bought or sold during the trade, while the quote is the currency used to make payment for the base. Okay, so what this simply means is you are selling the first currency is what you are buying. Okay, and you are making payment in the second currency. Okay, I made mention of Nigerian naira against the Canadian dollar. So, sorry, please. Okay, sorry about that, guys. So what it simply means is that what I was explaining is that you see, I said the base currency is the currency bought or sold during trading, while the quote is the currency used to make payment for the base traded. Okay, so what this simply means is that remember I said when you are jackpiring from Nigeria to Canada, you want to exchange your naira to the Canadian dollar, you are paying in quote currency because you are buying the base currency. That is all it means. It is very simple. It's just as simple as that. It doesn't have a further explanation. That is just it. Okay. So you just pay attention to what I'm saying, and this will be very, very easy for you. Okay. So moving on, we have the broker. Now, a broker is like an intermediary between you and any other person that is also traded. Okay, so they are the intermediary. Maybe you are selling. You know, in the financial market, it's not like the bureau de change where you take your money. Is done online. You get. So it's not like the way I explained. You going to the airport, going to the bureau de change department. So this is quite different from that. Okay, so in forex we have what we call broker. They are the intermediary. They are the ones that take the order. They take your buy and they take another person's sell and they merge you guys together. Okay, so the moment you are buying, another person is selling. I hope you understand this concept. So that is a forex brokerage company. That is their own job. That is what they do. So a forex broker is a financial service company that provides traders access to a platform for buying and selling of foreign currencies. You see what I've just explained. So that is what brokers, that is the job, that is what they do. Okay, now I will personally recommend you to my own broker, which is BtcDana. Okay, so BtcDana is a leading online trading platform with over 500 CDF instruments to trade, which means they have more than 500 assets. Okay, whatever you want to trade, forex, crypto, BTC, whatever it is, just name it. BtcDana has it. Okay, and they come with their company come with a low minimum deposit. That means you can start with at least with a minimum deposit of at least 3,000 naira, which is around $4 in if you convert it to dollar. Okay, so they allow you to trade the micro lot. Okay, so now you might not understand what lot means, but we will get there. So micro lot is, the smallest amount of you are willing to risk in order for you to open a position. Okay, their execution is very fast. They don't hang. So if you are using their app, immediately if you join the premium channel I introduced to you guys earlier, if you join the premium channel after depositing, now if I send you any signal, If you want to execute the same trade, the same signal I sent you, it is very fast. So that is why I said they are ultra fast. They has ultra fast execution. Okay, and your funding method is very, 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 very secure. You don't have to, you don't need to fear anything. I hope you understand. You don't need to fear. It's very, very fast. It's secure. Then they have negative balance protection. Okay, so they have negative balance protection in sense that there's what we call a stop out in their trading platform. Okay, so when you are on the negative, they don't want you to lose all your money. Okay, so it will get to a point where they will have to start closing those trades for you. And they have a global community. They have a Telegram channel where you can join, you can, so that if you want to know more about them, okay? And they have a multilingual customer service and more. So 24 hours, 24/7, they are online for you. If you need any inquiry, if you want to ask them any question, just go to their app, go to their Play Store, download, go to the Play Store or App Store, download their app, contact them, whatever you need, they will tell you, whatever requirements or information you need from them, they will share with you. Okay, so please download the app and let's go further. So we have pips. Okay, so sorry about that. I'm so sorry that this keep happening. Okay, so maybe we'll definitely possibly end this class you know, with this particular side, which is the introduction to the PIP. Okay, so I'll try and make an adjustment so that our next class won't be like this. Okay, please, I'm very sorry, guys. Pardon me for this. Yeah, you know, sometimes you plan something, it doesn't go well with, you know, how you planned it. So this is one of it. This is what is happening. I can't even explain for that. Okay, so a PIP is just acronym for a point in price. Okay, or percentage in point. You can call it point in price or percentage in point. So what it simply means is that let me not waste your time. Let me just give you an example of how the PIP work. So it is just a step in the forex market. Like when you see somebody is working step by step. So a PIP, the market move in PIP. Okay, so the market will move. I will say, wow, this market is moving. It's moving. Okay, you don't reach 1 PIP, you don't reach 2 PIP, you don't reach 3 PIP. So it moves in pips. Okay, so this is the example. And take note. Now, let me use Euro USD, for example. I have 1.06712 here. You see, after this decimal, I have about how many digits? I have 1, 2, 3, 4, 5. Okay, PIP is always the 4th digit after the decimal place. Okay, sorry about that, guys. So, like I was saying, the PIP is always the 4th digit after the decimal. Okay, so we have 1, 2, 3. This is the 4th one, which is this one. This is our PIP. Okay, and this last one, you don't need to pay attention to it, but this is this is the point. Okay, we say you see, we say a point in price or percentage in point. So a point in price, this is our point in price. This last year is our point in price, and this is our percentage in point. Okay, so we need 10 of these, just as we have the in our time, we say we have the minute and we have the seconds. So this is the seconds and this is the minute. This one here is the minute. You know, we need 60 seconds to make 1 minute, Abby. Now here you need 10 points to make 1 pip. Okay, so this is how it always is for all the pair except the JPY pairs. So any pair that has JPY at the back is an exception to what I've explained here. So USD JPY, for example, this is how their own figures looks like. Okay, look at it. Look at this. So there's 1, 2, 3 digits before the decimal point, and after the decimal point, we still have another 3 digits. You know, here we only have 1. Then after the decimal point, we have 5. Then we said our pip is the 4th one. Okay. Now here we have 1, 2, 3 point, then 6, 1, 2. Now, our pip here, since it is round to 3, our pip here is the second one here, which is the second to the last digit. Okay, we have 1, 2, 3. Then after the point, we have the second digit after this, which this is the point. This is the first digit. This second digit here is our pip. The first digit here, the last digit here after the point is our, after the decimal is our point. Okay, I hope you understand this. So, sorry about the interruptions, guy. I hope our next session will be like this. Okay, so I don't really know what's happening today, but I'm very sorry about it, and I hope to make adjustment before our next session. Okay, so because of all the glitches and what has been going on, please, I think we should end this session here. Okay, so that I can look into it, so that our next session will be like this. Then we'll be able to enjoy our lecture a bit better. Okay, so I'm very sorry, guys, but I have to end this session here. So see you guys on the next session. And again, please don't forget to make deposit to your BtcDana app. Oh, make deposit. Make deposit. Let me add you. See, you'll be making money. Look at it. This is all you need, just $15. Deposit $15 into your trading account, and then I'll add you to the premium channel. On that premium channel, I'll be giving you premium signals. Those signals you are going to start, you are going to use it to start making money. Okay, you are making money and you are learning at the same time. Isn't that interesting? So deposit $15, I'll get into the premium group, access to premium signals, market report, and more. Okay, and then if you deposit up to $200, you get into the premium group, access to premium signals, market report, and many more. Then you even get the chance to have a one-on-one class with me in the Zoom session. Okay, this one-on-one class, you'll be able to ask me more questions. We'll be able to, you show me your screen, we can share screen, you show me your chat. If maybe, if you are an